I'm joined today by Tim Pennington, Millicom's Acting Chief Executive, to talk about the company's fourth quarter and the year-end results. So Tim, you have over 55 million customers and revenues up by 15%. What's your take on the year?
Well, we've had a year of transformation and progress towards our digital lifestyle strategy. During the year, we launched 5 DTH services. We closed our groundbreaking transaction with UNE in Colombia, and we saw almost a quarter of our base adopt smartphones. So we think it's been a really strong year for us.
But the margin is down to 33%.
In some ways, we've been a victim of our own success. The very strong growth in handset sales, particularly strong in the fourth quarter, had a dilutive effect on our overall margins. I think if you look at the underlying margins, which in some ways is a better way to look at it, then we had a fairly strong 36.5% margin through the year. So we were happy with that.
Let's talk about Colombia. You had a big merger there in August. How's that going?
Well, the merger with UNE is the largest transaction in Millicom's history, and it is a major move for us. And it's already started extremely well. UNE contributed nearly $500 million of revenue to us in 2014, and EBITDA in excess of our own expectations. So we were very excited by the transaction. We have a huge opportunity in Colombia. UNE and our own business there now contribute about 30% of the group's revenues, with really great sort of future opportunity.
Turning now to Central America, where customer numbers have declined, how has that impacted the business?
I think the customer base in Central America is very strong. There was a technical adjustment to our subscriber base, but I think if you look at the underlying revenues, which is the important thing for us, we saw that they grew by 4%, which, given the maturity of that market, is pretty strong. And I think what really sort of featured for me was the growth in smartphones, which was astonishing in the fourth quarter, and really has been astonishing through the year. So, you know, good, strong momentum in Central America, strong margins, good businesses.
Turning now to Africa, you mentioned at your Capital Markets Day about the turnaround, yet revenues were down in quarter four.
Look, that's all about currency. In fact, in local currency, our revenues were up almost 13%. And you know, that is a significant turnaround from where we were last year. You know, it's fairly difficult macro environment, as you'll be aware, with oil prices, currency adjustments, but our underlying business in Africa is making enormous strides, and we're very pleased with the underlying progress.
At the CMD, you estimated data to be 40% of mobile revenue by 2017, but that's less than 2 years away. So is this really feasible? We
think so. I mean, and we are growing massively. I mean, today our data revenue as a percentage of our mobile is around about 30%. We sold 1.6 million smartphones in the last quarter. We've now got about a quarter of our base on smartphones. We have some really exciting smartphones sort of coming into the market, which will drive growth. We have a fantastic music product out there. This year we innovated with the FIFA application. We are doing Facebook in Colombia and in our other markets. So we truly believe that that is a very feasible target.
What is the future of mobile money? You used to say it was a blockbuster. Is that still the case?
Well, we think we've had a pretty good year in mobile money. Our customer base is up nearly 50% to just under 10 million. Our revenues grew by 46%. It is a really strong growth area for us in the business. Number of notable firsts during the year: interoperability, cross-border payments, interest on deposits. So we really feel that it is a growth driver for the future.
In December, you announced the acquisition of Telecable in Costa Rica. Can we expect further acquisitions in 2015?
Our focus is really on growing our business organically, and we have huge opportunities in the current business. But we will, where we see opportunities for in-market consolidation, we will take those opportunities. And Telecable in Costa Rica is exactly one of those opportunities. It is still subject to regulatory approval, but we expect that to proceed, and that'll be a very exciting opportunity for us.
In December, you closed Millicom Digital Ventures, having claimed that it would have a great future. So what was really behind that decision?
Look, I think the great thing about Millicom is its ability to innovate and move on. And I think during the last 12 months, what we've really seen working is bundling products and partnering with people. Deezer, our partnership with Deezer is a great example. We're now the major music provider in Colombia, for instance. And I think we see our customers really looking for great content from us, bundled off a fantastic access network. So we found that the Digital Ventures operation really didn't sort of deliver that, and that we're better focused in other areas. And I think continue to see Millicom innovate and change. We're not going to stand still.
Aren't currency volatility and frequent political uncertainty the kinds of reasons why people are avoiding investing in companies exposed to emerging and frontier markets?
Well, it's undoubtedly true that we do face currency volatility, and we'll continue to face it in 2015. But the great advantage of the markets we operate in is that they offer tremendous growth. They are still underpenetrated. They have a desire for smartphones and for data and for content and all the things we can deliver. So, compared to the Western Hemisphere, I certainly know where I'd rather be.
So what's the main challenge for Millicom in 2015?
Well, the main challenges are the ones we faced in 2014, regulation, competition, and the macroeconomic environment. Although in 2015, we expect these to be even tougher. That said, we've got really strong businesses, we've got the right strategy, and I think as long as we keep a firm grip on our costs, then we will be successful as we have been in 2014.
Tim Pennington, thank you.
Thank you.